Welcome to Master Trader, where you learn simple market analysis to make money investing and trading in the markets. I'm Dan Gibby, Chief Options Specialist, and in this video I'm going to show you how we use market internals with the technical analysis on multiple time frames to sell high probability puts and put spreads on the Index ETFs. These are the market internals that we use at MasterTrader to help us on our timing of major swing turns in the broader markets. Sentiment shows us how bullish or bearish the wrong way option traders are. And we refer to them as wrong way because just historically they're buying bullish call options at the worst possible time when the market's overbought, and they're fearful in buying put options after the worst possible time on sell-offs where the market's oversold. And that's exactly what this chart here on the bottom is showing us. These bottom green bands are bullish turning areas. Usually happens around the level of 1.2, and you can see we had a closing value here of 1.39, and this is a moving average, it's not a daily reading. So people are very scared on this market sell-off right here. We're down 10 days, the Qs are in a bear market territory, the spiders are, I think, down 19.8%, they're threatening bear market, so people are scared. Breadth, this middle one, McClellan Oscillator, tells us if the overall markets are overbought or oversold. Typically we get our reversals there at negative 200 when the markets are oversold, and same with positive 200 when the markets are overbought. We closed here at negative 318, blasting to new lows here. So this is telling us that it just does its job by saying, yes, we're overbought or oversold. Now go down to your individual stocks and ETFs of interest. When you get a bullish turn, in this case, since we're looking at oversold readings, then you can start taking bullish positions. We love directional trades when multiple time frames in our alignment. So if you get bullish swing trades, then go for it. But we love selling these out-of-the-money expensive put spreads. This is what's called the VIX Term Structure. And I know it looks complicated, but let me simplify it here for you. VIX is the SIBO Volatility Index. You can't trade that. It's an untradable product. You have to trade VIX futures, options, or ETFs. It closed at over 3607, so it's very high. And that's because of fear of people rushing to the option market to buy these puts for protection or speculation. All this term structure does is it goes to the VIX futures market and says, how much are you priced for future months of perceived risk? Typically, each successive month should be higher. But since we're in the middle of this storm, I call it, this nasty December sell-off, that's why it's so high. So these future markets are predicting contracting volatility. So this, coupled with our strategy of market internals and then looking at the charts, is why we love this strategy. The internals just gave us a green light. That doesn't mean start buying spiders or selling put spreads. It's oversold here, but there's no reversal. We got no Santa Claus rally. The media says this is the worst December in history. We had no Santa Claus. We had the Grinch this year. Here's the strategy we're going to be looking for a turn. Either a nice daily potent reversal, like maybe a gap and snap, a big bullish engulfing bar. But for day trading, if we're trying to pinpoint the entry closer, this is what we're going to be looking at. This is an hourly chart. It's still in a nasty downtrend. So step one is we're going to wait for the downtrend to break the downtrend. What does that mean? It fails to make lower lows or lower highs. Then we'll drill down to a 15-minute chart and look for a bullish entry. And then we're going to start looking for these put spreads. What is a put spread? These are just different pictures of the master trader bullish reversal patterns. And it, again, depends on multiple time frames and other things in our trading checklist. But what we want to do is find these compelling patterns and sell a put option where we're making a prediction that we think the pattern's going to hold. And then we're going to put that money in our pocket. We're going to buy a further out of the money put. And then the difference that we get is called a net credit. That's a put spread. We put it on under support, and then we manage in between. Now I'm going to show you the closing prices of these out of the money puts on the spiders. So when that volatility, the VIX, rises, the prices of these puts skyrocket, and that's what makes it attractive for us. I showed you the cooked internals. I showed you different pictures that we're going to be looking for. I don't know which picture is going to happen until it happens, and then I'll show you what we did. But this is our strategy. We have different game plans, and we see if they play out. And if they do, we execute, and if not, we wait for another game plan. When we get our reversal, we're going to be looking to sell these out-of-the-money puts on the spiders. And likewise, because of that high volatility, our matching mirror trade is to sell out of the money bear call credit spreads on the volatility ETFs, the VXX, the UVXY. This is just an example. I picked a $10 out of the money. So the spiders closed at 234.40, selling a $224 put. So that's $10.34 lower. That expires in 10 days to expiration, and then we buy a lower put, and we like $5 or $10 wide put spreads, but here's a $5 one just to show you the math and the mechanics. So I load this up. This is my Thinkorswim trade platform. I have it defaulted to a 10 lot. So if I'm selling the 224 and buying the 219, so that's a $5 wide put spread, the midpoint is 95 cents a share. So if I divide 95 cents by the maintenance requirement of $4.05, that's 23.5% return on my capital, as long as spiders close above 224 in 10 days. That is the beauty of selling these put spreads. The stock can go over $10 against me. And if I do a 10 lot here, that 95 cents a share represents $950 will hit my brokerage account, and it's full profit, as I mentioned, as long as it expires worthless. So that is our game plan. We're just now waiting to execute when we get our bullish reversal in the markets. If you'd like to learn how to do these credit spreads to generate weekly and monthly income, check out MasterTrader.com/spread trader. We have a great little silver package. It's 5 modules that'll get you off in trading. If you really want to master this subject, you really need the Mastering Advanced Credit Spreads, the gold. And it took me over a year to make that course. It's 12 very detailed, awesome modules. And you know, we have hundreds of incredible testimonials. I urge you to check that out. And the platinum, we throw in 3 months of our green trading room and the weekly options trader, which are the exact trades that you will learn in both of those courses. Please subscribe to our channel if you'd like to continue to receive valuable information on trading and investing in the market, and give us a nice thumbs up if that was helpful. Good trading, everybody, and see you in the next video.